right, let's take a look at energy prices this morning. They have been up this week. This morning, up by about 1% for WTI. But just 2 days ago, we were looking at the lowest price we'd seen in quite a while, just above $66 a barrel. The broader markets have been swinging as well, so we've been keeping an eye on all of this. And joining us right now to talk about it is Amrita Sen, Energy Aspects founder and director of research. And Amrita, we have seen oil prices down about 4% over the last month. Is that a function of drill, baby, drill with the Trump administration? Is it a function of concerns about the growth of the economy and maybe watching oil prices decline as part of that? Or is it a function of more supply as this talk of Russia ceasefire brings more Russian oil back onto the markets, too? What do you think?
So I think the main reason why prices are down is the second reason you gave, which is kind of concerns about the global economy. Obviously, everything that's going on with tariffs, what that does for global growth. Drill, baby, drill is purely rhetoric. It hasn't led to any increase in U.S. production. We actually don't think it's going to lead to any increase in production. Even with all the talks of tax cuts, already indirect costs basically can and are tax deductible. So any of these kind of talks about massive tax cuts that will benefit shale producers isn't actually true from where they are currently. Any of these tax cuts will only take place in 2026. The biggest thing which we've been saying is geology. It is getting more mature. We are going to get a lot of gas. We're going to get a lot of NGLs, but we are not going to get a lot of black oil regardless of that. Final point on Russia, Ukraine. We actually haven't lost any Russian oil because of sanctions. Let's be very clear on this. India and China are buying all the Russian oil. So even if there is a ceasefire, which, again, it might take months, as we believe it will, it doesn't mean more oil to the market. So this is really about global growth concerns rather than supplies.
There was a Bloomberg article just this week that said Russian oil flows surge in signs that U.S. sanctions are starting to crumble. U.S. sanctions on Russia's oil tanker fleet are showing signs of faltering after a clutch of blacklisted vessels loaded cargoes for the first time in more than a year. Is that not happening?
So that's nothing to do with sanctions removal versus where we are now. So the point being is that if you recall on 10th of January, the U.S. actually did put a bunch of sanctions on Russia. And that did lead to disruptions to trade flows. But again, I'm talking about production. We did not lose Russian supplies. There was no cut in Russian production. They simply put that oil on tanks and they floated it. Now, with those sanctions, basically, they found workarounds. Banks are allowing Chinese and Indian buyers to buy it again. That oil is reaching Asian buyers. So again, we haven't actually lost any production from the market. Yes, there was a disruption to trade flows. And, even if these sanctions are not removed, the workarounds are already there, as the article points out. And, the oil's flowing.
How significant do you think the risk to global growth is? And how much does that determine where you think oil prices head over the next 6 months?
So I think if you look at the micro oil balances today, they are actually very strong. I think we forget year to date, we have globally drawn down inventories by 70 million barrels, which is counter-seasonal. This time of the year, we build inventories because refineries go into maintenance. So I think that tells you that the market is tight. And even with additional OPEC volumes, which is very small, we have sanctions on Venezuela, potentially tightening sanctions on Iran. So I think that's the support that oil gets. The challenge, of course, is on the demand side, where we have seen a struggling China with a lot of the tariff policies. There's a lot of uncertainty in the market. And our demand growth number for oil this year is less than 1 million barrels per day. And I think that's where the downside risk is. Right now, there's just so much uncertainty. Traders are not even trading oil. I mean, of course, there's been bigger moves in the equity markets, but you just don't know whether it's tariffs or sanctions. The swings are just huge right now.
Which makes it dangerous to venture in. Amrita, thank you.
Absolutely. Thank you so much.